All right, this is the weekly coffee video for the week of Monday, August 26th. Let me start actually by taking a look at the newsletter itself. Maybe I can bump up the imagery here a bit. Um, well, I guess I can't. Anyway, um, here we have it. We've got 96.25 this week. I still have this as a multi-week containment level just because I think it well defines the this significant bear move following the summer high, the July high, and now we have a ceiling at 96.25, and below which the tempo remains bearish. You've got a little bit of support there at 93.70. That did happen to capture last week's lows. I believe the low is 93.40. And by the way, this is the December chart, which is now also reflected on the weekly continuation charts, which I'll get to in a moment. But we've got 89.65 on the way down. That's a decent support level. Let me show you that right. There we are. There it is. This is a weekly chart volume rollover, weekly continuation. We have a former channel structure here at 89.65. So 93.70 once again can contain session weakness, but even if we close below it on a daily basis, this 89.65 level is attainable this week, where I think we should place a weekly low. But it's not significant in the overall scheme of things. I do think that ultimately this market does want to continue south, so long as we're below 96.25, down into the 83.35 to 84.40 region, which could be only 2 to 3 more weeks perhaps, especially if we close this week below that 89.65 level that I just showed you. Then we've got a couple of things here. The first is the December chart itself, 84.40. It can certainly contain selling through the balance of December contract life, and it's also the start of a range of support down to, where are you? Bear with me here. Where is it? 84.40. I've got an 83. I don't know where it went. Oh, here it is. 83.35. So 84.40 to 83.35 is a range of support in reach over the next, I'm going to say 3 to 5 weeks, especially when looking at 83.35. This is the weekly continuation chart. So it's a little different than the 84.40, of course, which is just the December chart itself. But it is a solid range of support that I would expect able to contain selling really through the balance of the year. And once again, it is in reach below 96.25. 89.65 in reach this week if we close, say, early in the week below 93.70. And if we close below 89.65, then we're just about 1 to 3 weeks away from testing this big area down below, where once again the market can bottom out through the balance of the year. So just to summarize the downside, bearish below 96.25 into September trade, still expecting 83.35 to 84.40, possibly by the end of September, where we can bottom out through the balance of the year. Now, upside, if we close any day this week above 96.25, and we did settle at 95.10, so we're close to this formation, it's dropping at a pretty steep rate. I would expect 99.95 within the week. And overall, closing above 96.25, and we can take a look at that. Closing above, now the low from the close from the previous week was 96.25. Last week's close was 95.10. This formation is 96.25. So closing above 96.25 would be a higher settlement on the week. It would be a higher settlement before above the preceding 2 weeks. And I think it's enough of a go with in terms of a buy signal. They're going to have a little trouble on the way up in the 97 and 99 handles, 99.95 in particular, which is, there we are, 99.95 is nothing more than the high of the low. The low, though, was doubled last week, 93.40, 2 weeks in a row. And, so that's where I say 97.85, 99.95. In some people's books, this would be the real buy signal, closing above 99.95 at the end of the week. And so I'm sort of jumping the gun just a wee bit by claiming a buy signal following a weekly settlement above 96.25, but I think it's good nonetheless. I think it'll get some follow through, and that closing the week above 99.95 would probably just take the following week to accomplish. And then ultimately, what are we expecting? Well, I've got 106.35 up here. Let me show you. These are just nothing more than Fibonacci retracement levels. 106.35 is 50%, 109.45 is 5/8. I do think in this vicinity, the market can top out. Let's say we get that buy signal at the end of the week above 96.25. Then we've got several weeks of recovery, in my opinion, into the 106.35 to 109.45 region where we can actually top out into, if not through, October trade. Overall, let's go back to the big picture resistance areas. Begins at 111.55. I don't even have it in the support and resistance column because it's so far away. This is the area that did contain the July highs. So 111.55 is the start of a range of significant resistance up into the 115 handle, which I'm going to show you right here, and 115.25. So 111.55 to 115.25. I don't see us reaching that between now and the end of September, more than likely even the end of October. But you know, if we closed above 96.25 this week, in my opinion, this bear move is over. The big question is whether we can expect a full rally into this 111, 115 handle or not. That is really anybody's question, and anybody can speculate at that. But I do think that we could at least expect upward continuation into this 106.35 to 109.45 region. I have 106.35 here listed as an initial target, and maybe an ultimate target following a weekly settlement above 96.25. And I do think that's all that needs to be said for this week's December coffee.